Let's go through real quick. You sent me our regular market update for January, which is December closings. And there's some bonus content here of your 3-year trends, but let's run through the market first. You want to give me the rundown?
Yeah. So as usual, we'll look at the homes sold for the month of December. And interestingly, things actually popped up a little bit over where they were in November. So we're just over 1,800 homes that were sold. And you can see that's up, 4% month over month, but up 13% year over year. So compared to last December, things are up a little bit. Interesting to see where that goes. And then based on the current inventory, it looks like we've got about 1.5 months of supply. So things are slower, right? We know that because it's the winter. A bit of a curveball there.
Yeah, that's interesting. That's a big pickup from year over year. That's actually pretty good news, I would think. So as far as average sales price goes, that's still dropping. That's a seasonal effect.
Right. Yeah. And you can see, we always look at kind of like where those two lines are relative to one another, where people are listing homes on average, and then where they're actually selling, right? And you can see that as things heat up over the summer months, those lines start to diverge, and all of a sudden the actual sales price goes above where people are listing. Then as things cool off into the fall, into the winter, we see this kind of, the sales price drops below the list price. And that's what we're seeing here. This is not unusual or unexpected. One of the things that's also notable about this chart, as you well know, is looking back a year ago, even though things are down from where they were peaking in the summer for us, we're still up year over year. So that's $16,500 or 5% higher this year than December of last year. So even though we're under the asking price, things are still up year over year in terms of what people are actually selling for.
Yeah, that's been consistent. And it's always good to see, knowing that, your investment's paying off year over year, depending on when you sell it, obviously. Donut chart, as expected, a lot more houses are selling below 5% under asking price. And that's been the trend for a few months now. I don't expect that to change anytime soon. Why would it? Unless, market forces change drastically. That would be interest rate or supply. We're going to see that continue along this trend, and I think this is the balancing trend.
Yeah, I totally agree. And yeah, as you were transitioning there, days on market, very similar to where we were this time last year. Again, you look at the curve, things really start to slow down in the winter. No big surprise here. We're pretty close to where we were in December of last year. A little bit ahead of the curve, maybe compared to last year at 28 days, and then here we're at 33. But you can see where things peaked around that 33, 34 days mark last year in terms of average days on market. So I would expect that in the next couple of months we hit the peak and then start to trail back off.
Yeah, and that just makes sense because you don't want to move in the winter. It's not only convenience factor as far as moving kids in the middle of school. It's cold, and days like today in particular, it's really cold and it's icy and it's uncomfortable. And this is not the climate that you want to move in. Now we still have sales because life happens and real estate happens along with it. So people have to move. People have to find places, and there are definitely deals to be had this time of year, which is a little bit reflective of our next chart is the price reductions. Those are up more than I expected them to be.
Yeah, it seems like some of these things have shifted a little bit above where they were last year. Price reductions at this time of year, certainly part of that. We're up, 4%? It was only 35% of sales had a price reduction at this time last year. We're up to 39% for December of 24. I would expect, though, that things plateau, they level off, they start to come back down. Maybe they'll go up a little bit from here, but to your point, when there's less competition, this is what we see, right? People have reasons to be selling. They have to get that house sold, and oftentimes when there's fewer people, bidding on that house, you have to lower the price to get more interest, and that's totally reflected here as well as the days on market.
And then 30-year fixed. We've been shimmying with the rates right around the high sixes. Better than we were this time last year, low sevens rather. Everyone's getting used to the fact that I think rates are going to hang out around the 6.5, high sixes to low sixes mark for a while. And as we come to terms with that, I think the market will bounce out a lot more. Now, thank you for doing that as always, Danny, but I'm really interested in this little bonus content you have for us, which is the 3-year trends on the macro level. And we can track how we've been doing, how we've been changing in this market for the past 3 years. It's pretty big. Let me see what we got here.
Yeah, I mean, this is interesting. I mean, you and I, we've been doing this now for 3 or so years, and figured we had the data there. We may as well take a look and see how things have moved. If you look all the way back to 2022, boy, we came in over 27,000 houses sold for the year for our Central Ohio market. And the last couple of years, that's trailed off. 23,000 last year, almost 24,000 in 2024. Sorry, 23,000 in 2023. And then, of course, last year we were up to close to 24,000. So, really that's a sign of the interest rates, right? Things really went up quite a bit, and we saw, everything kind of slow down, and then things started to build back up.
Yeah. So I remember this period, the back half of 2022, all the news was saying rates are going to go up. The Fed's going to have to curb inflation, and we all remember living through that. That started happening in Q4 of 2022 and into the first quarter of 2023. We saw a flurry of houses being sold because everyone wanted to get in before the interest rates went up. That was actually a really smart move, turns out. And then towards the end of 23, things just kind of dropped off a cliff, and then they started to settle out more. How do we say this? They started to normalize in 2024. That's why you saw a little bump up in homes sold there. But the good news is, and I'm looking at the next 2 lines here, if you did buy in that flurry of 2022, you were way ahead of the game, of the curve, as far as appreciation goes.
Yeah, I mean, it's huge. Just over those last couple of years, both the average list and average sold price. The other stuff, we've got average and median days on market. Things are a little bit slower, I guess, these last couple of years, probably for the exact same reason, more price reductions. I think probably that just means, even though things have gotten hot during the big buying months, I think things were much slower, right?
Yeah, so those numbers are going up. I need to mention, so first of all, I like the median days on the market better. The average gets thrown off by 1 or 2 houses that are way overpriced and sit on the market for a long time. So the median is a better indicator. At 5, 6, 7, that has been growing. Those are very, very small numbers still. So we just need to keep that in mind. If you price it right and do your research, that's still a very short time on the market. Now, that is longer than 2 years ago, but I mean, in real terms, that's negligible amount of time. Price reductions have gone up, though. So that's, again, people say that's a declining market. I think that's a balancing market because the prices are still up and the supply and demand curve is still skewed. So price reductions are just part of the game to balance out the market. I like it. So basically, what you're saying here, Danny, is if you bought in 2022, on average, if you bought an average home for average price, you're about 40,000 ahead in equity. Yeah, and that's a win. So if you bought a house at the average price in 2022, you did pay more on average, but the result is 12% increase in 2 years, effectively. 2 years, your house went up 12%. So this is one of those reasons that I heard this again today. Why real estate versus, conventional market investing? It's because you're buying 350 worth of assets and getting appreciation on that. You did not pay 350 to get that asset. In most cases, obviously. Some people buy cash, but you put 10% down, you doubled your money in 2 years.
Yeah.
That's pretty solid investing to me. So
yeah, and I think the big thing for us is we know that the market continues to be undersupplied, just in terms of the growth that we're seeing, people coming into the market, and we just can't build fast enough. So that's a good sign for anybody that's currently in a home. We'd expect that equity is going to continue to grow.
Yeah, and I'm thankful that you always do this because with this data, we can actually observe real changes, compare it to our typical movement, seasonal movement, and start to talk about what's changing and what to expect next. So thanks as always, Danny, for doing this. Let's do this for another 3 years and see what that looks like.